Everybody, welcome to another episode 2 of Stock Pick. And here we are, we're going to go over Bank of America and why I think it is a good buy at this point, although it still could go a little lower, but it has tested its 52-week low and is rebounding. Now, for guys you don't know, I'm Sal. I'm the other half of Simply Investing. I go over all these videos for you guys. This we will be doing these stock updates. They'll come out every Friday on a particular stock. Episode 2 will air on Friday, October 27th. However, if you'd like to catch it live, or not live, but I'm sorry, if you'd like to catch it a little early, you can go and join our Patreon, $3, and you get this information quicker than you would on YouTube. So help us out, support that Patreon. Also, you can just support us by liking and subscribing and following our lives every day, every 8 o'clock in the morning, market morning news, Monday through Friday, Saturday, entrepreneurial news at 10 a.m. And then, of course, on Sunday at 9 a.m., and this is all Central Time, we have What's in Your Portfolio. So we go over my portfolios, go over losses, go over all that fun stuff, right? But here we are. We're going to talk about Bank of America for this run. Now, as you can see here, if you go over the 5-year period, we are still down from, it started off at $28, had a pretty good run up to 49, and now we're down here at $26.30. However, in the last week, it's still doing pretty good. But if you do the last year, you see here we've had a nice 21% drop, but we're still hovering around the 52-week low. So with that said, it is still a pretty good option to buy. I do have it in my portfolio on my TD Ameritrade account. I do have quite a bit of shares on it. The reason why I have it is because I still think it has a lot of great potential. They are making a good amount of profit, as I'll go over shortly, and they are making some significant advancements. Now, unlike their direct competitor, Wells Fargo, they are still in the mortgage game. Wells Fargo, one of their biggest competitors, has closed down their mortgage department. So now these guys have less competition to deal with, and they primarily do lower cost mortgages. So what I mean by that is they are targeting somewhere between 150,000 to 250,000 homes. In my area alone, I'm noticing that they are also always tagged in a post with a couple of the low income housing builders that kind of average around $200,000 homes. They're kind of in that area. But enough with the price analysis. We see we're on a downward trend like many of the other places. However, one good sign is when you look here, 50% of of uh, of analysts are saying this is a good buy. The rest are saying hold. Some are saying sell. Now, here's why I say it's a good buy. If you look here, other than Q2 of 2022, right when it started the downfall, but you see here, beat earnings, didn't beat earnings, beat estimated earnings by a lot, beat estimated earnings. And since they're increasing the dividend, which I can go here and show you right here, they're increasing the dividend to 24 cents a share. So this is pretty good. Now, you guys don't know, I have quite a bit of shares. I just recently bought 500 more shares for Bank of America, just slowly increasing my holdings. Times 0.24, you're looking at $504 a quarter times 4. So you're looking at, if you have about 2,100 shares, you're looking at about $2,000 per year that you're going to be making off of this that you can put in either back into Bank of America stock or into other avenues. Now, with this saying that they are increasing the dividend rate, I am now probably going to start buying dollar cost averaging in and buying this over the week. So I'm just letting you guys know that I actively have this in my portfolio and I'm actively buying it. Just so you know, now that is not for you guys. If you guys decide whether you want to buy or not, that's entirely up to you guys. I recommend that you do your research and you make sure you understand everything. But as someone who has a Series 7 license as a broker, I can tell you right now, it's not a bad bet to have in your portfolio. So as you can see, here's some of the other things that are in here. But if we go look at Wells Fargo, I want to kind of take a look at Wells Fargo here. they're kind of in the same boat. They had an all-time high there, but you can see here they kind of dropped during the pandemic, and then they went back up, and they've been staying steady. But they had a few scandals. They of course have been redlining a few clients, especially minority clients such as Hispanics and Black Americans. So I'm thinking Wells Fargo is going to are unfortunately going to bite the bullet on this one. They're gonna have a major pullback. Out of these major banks, I think Wells Fargo is probably going to be the one. If there is a banking reset and it resets, Wells Fargo is going to be the one to go down. That's just my opinion because I know firsthand that they have a lot of people that work for them that are not necessarily good bankers, and it's all about production of numbers, not necessarily understanding of banking. Plus, a lot of them in there are handling bank assets improperly. So that's just my thing. I think we're going to see this go down a little further, but we're just comparing them in an example to this. But here's what I want to say about Bank of America, right? So the analysts are pretty much neutral on this. That's usually for me a good sign because if they're neutral, they're kind of like most of these people. They label themselves as economists, mathematicians, all this stuff. That is all irrelevant when you come to picking stocks. You have to really read the news, read consumer sentiment. What's the business doing? How are the employees? Now, I could tell you right now, they have changed their attitude towards their employees and how their employees behave to their people. I do a lot of banking with Bank of America. It is rather expensive on my end, but this is also why the dividend is high. They do charge a lot of fees. They charge a lot of processing fees, payroll fees, all this. They charge a lot of fees. That's where they make a bulk of their money. And then the biggest bulk is on their mortgages and their commercial loan product. So what that means is I got a nice chunk of loans from them to go buy a couple trucks, a couple moving trucks, and a couple trailers for my logistics side. So they are actively lending money to the transportation industry. That alone is going to bolster their earnings right here. It alone is going to bolster this. I wouldn't be surprised. I don't know what the anticipated shares are, but we already got their one for Q3, which was you see here. I don't know what anyone's anticipating for Q4, but they're looking at they earn 90 cents a share in Q3. I anticipate that they're going to earn about 92 cents, maybe a little bit more. But if you look at Q4 here, they're right at 80 cents, and then Q3 they get another Q1 they get higher. So I'm thinking if you look at this chart, it should be somewhere right around in the middle here, 92 cents. I'm anticipating that they're going to have a 92 cents per share. We won't know until 3 months later, but I'm pretty much banking on 92 cents per share as earnings. Now, we can go back and forth on this over and over again. But the part of their also reasons they are doing a lot of auto loans. And I want to kind of share this because they are doing a lot of auto loans, and we're going to go over this article. It's on Yahoo Finance. I don't really consider Yahoo Finance a great source of it, but nonetheless, it's still information we can consider. But we got to get that story open. So, an earning per share has grown 20% per year compound in the last 3 years. And that's mainly because they've been focusing on commercial lending, commercial capital lending, fees and account fees and everything. Because the more businesses you have, the more fees you incur. Because businesses, we're constantly transferring funds, we're constantly paying out employees, we're constantly doing payroll processing, we're constantly doing a lot of things. We're also constantly ACHing to other vendors. So there's fee after fee after fee after fee after fee. And we're constantly withdraw money. We're using the credit cards. Like I have 2 Bank of America credit cards that I have. And I used the points to get supplies for the office. So I rack up about $1,200 worth of points every couple months, and I use that towards paper. I get like a year's supply of office supplies every quarter, and that's crazy. And that's why I like it. Now, as far as the fees and everything on those cards, astronomical, astronomical. It's just out there. So that's why I'm saying they're probably going to they are going to weather this crisis very well because they're paying more fees, they're charging more fees on everything. Unfortunately, for the average American, that's where they're going to get hurt because the average American has less and less and less money in their checking accounts. I think the average middle class American went from something like, and from what I read on the reports, it went from 8,000, average of about $8,000 in the average checking account down to about $2,000. So that means either one, people aren't making enough. That means they change jobs and aren't making the same as they were before. Businesses have cut the labor costs of individuals, or they just no longer have a job and they're getting unemployment. Now, the one thing that we can't find is for some reason we can't find the good unemployment numbers, but that's another story altogether. But the reason why I say Bank of America does deserve our attention, just like as Ark saying, is that they've been beating the crap out of their earnings reports, and they've been beating expectations last 2 years. They've been very, very, very quiet, which is very weird as to why this stock did not level out like Wells Fargo did. It kind of went downhill. Yes, there's some scandals going on. There's some crap. Now, I could tell you, as someone who used to work in institutions like this, I used to work at Bank of America, not just them, but everywhere else, is that unfortunately the people that work for them do have some degenerate behaviors and tendencies that they operate with. So those will always be around, especially mortgage lenders, anyone involved in mortgage securities, lending money, account management, all that stuff, right? They really, what I can say is they don't focus enough on minority businesses. They don't focus enough on the unbanked. They don't focus on the unbanked in America. There's a lot of people unbanked in America, and they need to focus on a way to bring that in. If they could be the first person to tap into that, they can they can gain a significant revenue stream. Now, I'm not saying sell mortgages, I'm not saying all that, but there will be people who are saying, "Hey, look, I'm just here to close a buck. I'm going to sell this degenerate mortgage to this person who's not financially literate." And all they see is that I get a piece of the American dream as I rip it out from under them. Unfortunately, those people are always going to exist in no matter what business you work with. But with Bank of America here, if they can get into the inner cities, if they can get to the unbanked, if they could find ways to attract people instead of cashing checks, hey, get a bank account. Like I would say, set up a bank account and refer someone, get $100. Not bad, right? Now I could tell you this, and this is just from a business personality. It's unfortunate, but it is true. Like a lot of inner cities, a lot of the unbanked, they don't really know a lot about fees, and unfortunately, what I'm telling you is, if they target that, they will incur a lot of fees, a lot of fees. Now it'll be against public opinion, but the small minority of public opinion, because they are a bank, they do need to make money and they do need to earn their business. However, they can also really build up their business, their namesake, and their reputation by investing in those communities. Now, that just doesn't mean like building up it, like, attacking them with poor products. What it means is invest in the businesses, invest in the infrastructure, lend the money to the infrastructure, make the lending available for people who want to rehab the houses and everything. I could tell you it'll turn it around. Now that's a good opportunity area for it. I think they're going to get hurt a little bit with their mortgages. You know, they're just going to get hurt with that area, but with it all being said, if they keep staying focused on lending capital for trucking companies, logistics companies, manufacturing companies, they will literally make it. And they can also, in about 5 years, get the little stamp of, we help make America great again. So that's what's going to happen. Other than that, I would say, my rating on Bank of America is an A. They're beating earnings shares. They're beating their profits growing at a steady 10 to 11% per year. I don't know why this stock is down, but it's a true undervalued stock, and I am buying it. However, I recommend that you do your own research and make sure that you're comfortable with it. I can tell you this: Bank of America is in a lot of Vanguard portfolios, pension portfolios, things like that. So, with that said, guys, I do rate this as an A. as a quality stock. It's undervalued enough. It could go a little lower. We might see something around $20 per share, but just keep that in mind. We still got another nice dip before we hit the bottom of this recession. But it is a good company to dollar cost average in over the next 10 years, as I have been doing for the last 12 years. It's just been buying Bank of America stock. But with that said, guys, thanks for watching. Like and subscribe. Hit the share button. Go to the Patreon. Go to the Facebook. If you want to PM message me, go right to Facebook. You can direct message me there, or go to the link for Instagram and you can direct message me there. But thank you, guys. I hope we can see you tomorrow at 8 a.m. for our live. Really appreciate it. Hopefully, you guys learned a little bit about this stock, and you can give it. There wasn't much to say other than they're doing a lot of things right. They have a few hits coming, but overall, I still say it's an A rating, and I'm buying. I'm dollar cost averaging in. I'm buying about $3,000 to $4,000 worth of shares per week. I'll probably do this for probably until I run out of my powder for stock investing, or I'll just probably keep dollar cost averaging in for the next several years into Bank of America, because I do believe. Now I'm also a patron of Bank of America too. I have my personal accounts with them. I have my business accounts with them. I have other investment products with them. So I do have a lot with them, and they do make a lot of money off of fees off of me. I can tell you that right now. So just keep that in mind. Thank you, guys. Have a wonderful day. Hopefully we can hit this bottom of this recession quickly. With that said, do your own research, protect your wealth, don't invest more than you're willing to lose. And remember, I'm not a financial advisor. I'm just a licensed broker. If you need financial advisement, I suggest you go seek a financial CDF professional, certified one, so they can get you on that right game path. I recommend Pacific Mutual. They have a great, or I think it's what Pacific Northwestern Mutual. They have a bunch of great teams. They also have a great program, which I use, and one of their great guys is one of my financial advisors. So with that said, guys, thank you. Nothing was paid subscription, paid advertisement. So just make it. I'm telling you guys, and I'm betting with my own money. So I will see you guys later. Thanks.